Thank you for giving me the opportunity to speak to Zawya. Always good to speak with you. We are bullish in terms of the spectrum of opportunities that will come from the equity capital markets space in the Middle East, and in particular in the GCC, the two key markets that you've alluded to, Saudi Arabia and the UAE. What we saw in the first half of the year confirms our outlook in terms of the size, volume, and the appetite amongst investors for assets coming out of the region. For the rest of the year and into the new year, our expectations is a continued growth in that market, driven by both growth/expansionary IPOs and flotations, and also trades that seek to be efficiency driven, so consolidation, cost driven transactions, especially in the M&A space. And on that basis, frankly, our expectations are quite rosy for the sector. Given Saudi Arabia's very ambitious aspirations and the amount of funding needed and capital to be deployed to part fund these initiatives, we see a lot of opportunity for us in Deutsche Bank and across the industry to play a very pivotal role in intermediating and providing capital solutions to those initiatives, be it in the loan market, be it in the debt capital markets, be it in the structured finance area, be it in the private credit space, and a whole lot of other more innovative mechanisms that should be introduced in Saudi Arabia, because most definitely those will go some way towards addressing some of the funding needs that will be required to realize that wonderful vision. I have always been a proponent of Saudi Arabia actually blazing a new trail for how to fund projects. So when I was referring to more innovative solutions, more entrepreneurial solutions, some of which may exist somewhere else, some of which may actually be new and innovative on a global basis. Tapping into pools of capital and pools of liquidity that exist in the region globally and in Saudi Arabia domestically, pools of capital that have not been tapped to fund projects and government-led initiatives, those will be quite useful if we found means and ways of tapping into them while protecting the interests of the investors, while allowing sufficient flexibility by way of structure and cash flows to the users of that capital amongst the GREs and the operating companies of the government. And I believe that solutions can be found to achieve both objectives. If we were to do that, I think that will be great for the country, great for investors, and great for project sponsors and developers. So private wealth is one key source, and private wealth is a broad spectrum of pools. It can be family offices, can be ultra high net worth individuals, can be special vehicles that were established by wealthy individuals, can be specific funds managed by asset managers, fund managers, for the purpose of managing wealth for various individuals. And in addition to that, of course, you have insurers, both, by the way, we're not just talking about, again, domestic sources. We're talking about regional sources. We're talking about global sources. But sources that have not been tapped up to this point in time by project sponsors and project developers in the country. The idea is not to cannibalize on what the GREs and the project sponsors can tap into. At this stage, the idea is to tap into, again, sources that have not been tapped up to this point, at least not effectively and not in scale. And I think it's about time, given what we seek to achieve, especially over the last few years and into the 2030 milestone that we all aspire to achieve. I think the need will definitely be there to tap into those. And to the extent we can do that, that would be great. Well, wealth management is an important business vertical and a key focus for Deutsche Bank, for sure. That said, we began our presence in the region with investment and corporate banking. And I suspect that whilst growth will be seen in wealth management, you will see growth in investment banking and in corporate banking as well. That is key to our strategy in the region. I think the point that you've touched upon at the very beginning of your question is perception about the region being a wealth management region. I think what you meant to say, and correct me if I'm wrong, is the perception amongst global finance firms is that the region is an exporter of capital. Okay? Whereas now we seem to be recognizing that we are at some inflection point where the region is exporting some capital from some jurisdictions, but at the same time is actually attempting to import capital. And that pivot is actually happening and is definitely taking place. And I think smart bankers and smart institutions will position themselves to actually be part of that process as a business strategy. But also conscientious institutions will do their part in terms of helping facilitate the provision of such capital solutions to clients in the region. And we definitely want to do that. And this is a commitment that we shoulder upon ourselves every day. I see growth going forward. I see growth. I don't think that the outcome of the US election process or a reduction in the rate environment will actually be detrimental to the momentum that we see when it comes to IPOs. If anything, a lower rate environment is conducive to making equity offerings in the region more appealing, and that is also helped by the fact that investors will find it more or easier to raise viable financing to go into those positions. U.S. outcome, I think, might indirectly affect things if, God forbid, we were to go into a massive geopolitical situation as a result of a policy change in the U.S. that could add a degree of instability to the region, which we hope will not be the case. But the geopolitics, the intra-regional geopolitics impact will be more pronounced than the outcome of the U.S. elections is my own assessment. And I'm hoping that if the situation in the region is contained, I don't see any reason why offerings, equity offerings, will be deterred. We pride ourselves on being a very active partner of Africa amongst our peers. Our efforts have been humbly recognized by global sources. I mean, we've won, I think, the best financing bank in Africa for 2023, if I'm not mistaken. And that is a culmination of many years, in fact, of being present in Africa, working with development finance organizations, development banks, global, African, Asian, European. Just to give you a flavor of this, I think we've done about 38 bond issuances out of Africa since 2014. 38. Over 10 years, we've done 38. That is about more than three issuances a year with sovereigns. We've done, just over the last 6 years, more than 20 structured finance transactions. Besides those, again, working with global partners to fund vital infrastructure and industrial projects in Africa. And the pipeline is quite robust at this stage in terms of what we will be doing in Africa, and I think that is set to continue. And frankly, it's a point of pride for us, and it's something that we are determined to pursue with vigor.